Before we jump into the details, let me ask you something. Have you ever looked at a chart and felt unsure about how the bigger picture connects to the smaller movements? When you understand how the weekly structure flows into the daily structure, the entire chart starts to make sense in a completely different way. So in this breakdown, we're going to walk through the entire move step by step. First, we'll build the higher time frame context on the weekly chart, and then we'll zoom into the daily chart to see exactly how each internal leg developed inside that larger trend. So if you like this kind of video, please like, subscribe, and turn on notifications. And join the ComLucro community to support the channel and keep improving as a trader. Now, let's get started. On the weekly chart, the entire bullish cycle begins at weekly low 2. This is where the market finds support and stocks building upward momentum. From that point, price pushes higher and creates the weekly change of character 1. This is the first confirmation that the previous bearish environment has ended and a new bullish phase is beginning to take shape. Before we move further, one quick clarification. When you see the label weekly daily on the chart, it means that the same price point represents structure on both the weekly and the daily time frame. Later on, when we analyze the daily chart, this will become very clear. For now, let us stay focused on the weekly structure. After the shifted weekly change of character 1, price continues climbing until it reaches weekly high 3. This becomes the first major high of the new trend. At this same level, you also see the label weekly daily break of structure 3. At this stage, it is simply the point where the future break of structure will be confirmed once price eventually trades above it. From weekly high 3, the market begins a natural retracement. This pullback continues until it reaches weekly daily higher low 4, which sets the new higher low of the weekly trend. Inside this retracement, we also have weekly possible change of character 4 and the weekly order block 5. This entire zone represents the institutional demand that defended the bullish structure and prepared the next upward leg. From weekly daily higher low 4, the market starts the next bullish impulse. As price rises, it eventually breaks through weekly daily break of structure 3. This confirms the continuation of the bullish structure that started at weekly low 2 and shows strong buyer commitment on the weekly time frame. The move continues to expand until it reaches the major top labeled weekly daily higher high 11. At that same area, we see weekly daily possible break of structure 11, marking where the combined weekly and daily structural break is recognized. With this high in place and weekly daily higher low 4 acting as the base of the move, the entire weekly impulsive leg is complete. Between these 2 points, the weekly order block 5 remains as the key institutional demand zone that supported the entire continuation. This gives us a clean, organized view of the weekly movement. The market shifts at weekly change of character 1, rallies into weekly high 3, retraces into weekly daily higher low 4, and then extends powerfully into weekly daily higher high 11, leaving weekly order block 5 as the foundation of the trend. Now that we understand the weekly structure, we can zoom into the daily chart to see how price developed each internal leg of this move. On the daily time frame, the movement starts at weekly daily higher low 4. From here, the market begins a new bullish leg. Price pushes upward, breaks through the level identified earlier as weekly daily break of structure 3, and continues rising until it forms daily higher high 5. At this point, we also mark daily break of structure 5, which will confirm this bullish leg if price pushes beyond it again in the future. After forming daily higher high 5, the market retraces and creates daily higher low 6. At this point, we also mark daily fake change of character 6, not because a reversal has been confirmed, but because the structure suggests that this level may eventually become the origin of a bearish shift. For now, the uptrend remains intact, and daily higher low 6 is simply the next higher low inside the structure. From daily higher low, 6 price pushes up again and forms daily higher high 7. After this, the market starts a deeper retracement. This pullback is what confirms daily fake change of character 6, because price respects that point and moves down into a new swing low, which becomes daily higher low 8. Even though the fake shift is confirmed as a reaction point, the move still fails to create a bearish daily break of structure. Without that, market does not transition into a downtrend and the drop remains corrective rather than a true reversal. From daily higher low, 8 buyers return and drive price higher once again. This final leg reaches all the way up to weekly daily higher high 11, breaking through daily break of structure 7 in the process. With this break, the market marks a possible weekly daily projected break of structure 11 inside the broader uptrend. During this last push, price leaves behind a daily fair value gap 9 and a daily order block 9, which both become important reference points for future reactions. After setting weekly daily higher high 11, the market retraces and trades back down into the area between daily higher low 8 and the major top. Price has already mitigated the daily fair value gap 9, filling the imbalance left behind, but it has not yet reached deep enough to mitigate the daily order block 9. At this moment, price is trading inside the range between daily higher low 8 and weekly daily higher high 11, sitting in the discount zone of the daily structure, where buyers typically begin looking for new opportunities while the order block below remains untouched. To wrap it up, the weekly chart shows a fully intact bullish structure, with the market moving from weekly low 2 up into weekly daily higher high 11, and leaving the weekly order block 5 as the foundation of the trend. Even with the recent pullback on the daily time frame, the broader weekly direction has not changed because the main higher low that holds the entire structure together is still protected. On the daily chart, we can clearly see a corrective phase unfolding. Price has already mitigated the daily fair value gap 9 and is currently trading between daily higher low 8 and weekly daily higher high 11, inside the discount zone where buyers usually look for opportunities. The daily order block 9 remains unmitigated, meaning there is still space for deeper liquidity hunts before any major continuation. And since none of the bearish attempts on the daily chart have produced a confirmed bearish break of structure, the larger bullish narrative remains intact until proven otherwise. As price continues to evolve inside this range, stay aware of the potential for deeper tests into the remaining daily and weekly demand areas before the market chooses its next major direction. This is exactly where patience, structure reading, and disciplined analysis become essential. If you enjoy this kind of multi-time frame breakdown, let me know in the comments. Tell me what you saw on the chart, what you want to study next, and whether we should turn this into a regular technical series on the channel. And if you want more detailed studies like this one, drop a like and share your thoughts below so we can keep bringing deeper market structure analysis for you. Please also remember that our mission here on the ComLucro channel is to give traders the clarity and confidence they need to make smarter decisions in the market. Every video, every course, and every piece of content we create has one clear purpose: to deliver practical, easy-to-apply knowledge that helps you grow step by step as a trader. Here on the channel, you'll find complete courses on smart money concepts, technical analysis for day traders, and trading psychology. Because trading isn't just about charts, it's also about mindset, discipline, and risk management. We also share lessons and insights from some of the most respected names in trading, professionals like David Paul, Alexander Elder, Tom Hugard, Mark Douglas, Al Brooks, Larry Williams, and many others whose experience has shaped the way we understand the markets today. If you enjoyed this video and found it helpful, please give it a like. It really helps more traders discover our content. And don't forget to subscribe and turn on notifications so you never miss our latest insights and strategies. If you'd like to go even deeper and access exclusive content, early video releases, and additional tools to support your development, consider joining the ComLucro trader community right here on YouTube. It's a simple way to support our work and a smart investment in your own growth as a trader. Thanks for watching, and I'll see you in the next video.